Guys, Kunal here, Bulls on Wall Street. Guys, I want to talk to you about something really important on how to read market indices to get a gauge of where the market's going to go on an intraday basis and then what stocks you can play after that. Oftentimes, especially when we're new or even a developed trader, we take a little bit of a guessing game at the open, right? The market may open up strong, so you're thinking, oh, wow, it looks like a long, and then right at reverse, and now you're thinking it's a short, then it comes back to support, and you're thinking it's a long, so on and so forth. And you can get stuck in this real spin cycle where you're always on the wrong side of the trade. So what I want to do always is get a gauge of where the market is on the daily charts, but then using all the different indices and leading stocks, come in with a plan on what to trade depending on where the market breaks in the opening range. So one of the things that we could see on the QQQs is we had a big dump on Thursday into the afternoon, and then we got a very, very small gap up the next day. Whenever you have a big dump the previous day and you get a light gap up, and then you start to see all the leading stocks opening weak, this is a big tell that the market has a potential for rollover. So even though the QQQs, I use a 6-window layout on TC2000, and you can see even though the QQQs are opening up okay, right off the bat, like see NVIDIA gets rugged off the first candle, right? And then what you start to see is, right, Tesla, weak on the first candle, right? AMD, first candle, big spike down. And so Amazon, look at this, it gaps up and then it immediately reverses. And so we already have a tell of where the market's going to go because the leading stocks are telling us right off the bat on that first candle that we're going green to red. So even though the QQQs are opening up okay, what we're seeing on an individual basis from the market leaders, and remember that this market is really just run by 6 or 7 stocks, we know what we got to do for the rest of the day. So when we start to see this and the QQQs gapping up, we're not trying to buy on this opening range if it's like starting to test out this area. You got to see which way the opening range starts to build, right? And so that's usually going to be your first 15 to 30 minutes. And then we want to take a look at those leading stocks. If they start spiking down, then we know, okay, we have a potential trend down day. So when I start to see this, I get real excited because I see right off the bat, like, okay, NVIDIA dumps off, Tesla dumps off, Amazon dumps off. And so I want to take down some other stocks that are going to be doing this. And so, one of the things that I had mapped out, with the guys in the chat room is that out of all the indexes, the IWM has been really, really nasty. On Thursday, we had a pure trend down day. The IWM was down 2.5% at one point. And so this is a relative weakness compared to the rest of the market. And so when I see the gap up on this and we roll green to red, that's the play, right? That's going to be the big play. And so index trading can be a little bit slow. And so what we want to be doing is the puts on this bad boy. And so, we ended up coming in and, I ended up kind of covering a little bit early here as I was done by noon. But we ended up kind of shorting the gap up on this bad boy and then just taking this bad boy all the way down. And so what I want to do is the puts. When this thing starts to roll over, we're opening at 172 and some change. I take the 171 puts and now we're off to the races, right? And so you can come in as it starts to break over the first candle. We can come in, put a stop at the bottom, and now you're into a potential index trade for the rest of the day, or as long as you're kind of riding down into the EMAs. I ended up covering around 171, so a little bit early for sure, but I don't like to trade in that midday chop. And so just something very, very easy to do. So what you want to be doing, right, look at where the first candle opens. When you take out the range of that first candle, you can come in, put a stop right up under it if you believe that the market is going to be fading off that day and doing that green to red. And we start to see right on the first candles, right, what NVIDIA and all these other stocks are doing. Now, the reason I didn't do the QQQs is because look at the chart of IWM versus QQQs and look at the previous day. We have this extra range here. And so I know that if I take this type of trade, I'm going to get a lot more range. Now, once the market starts to roll and the QQQs come in, then I'm taking every single other setup possible that I can. I want to hit any kind of bear flag or green to red or anything along that end. So, as soon as Microsoft, for example, goes green to red, I'm coming in on this one, and I end up covering a little bit early here, 329.40s, 328.90s. So when this starts to go in, right, we're hitting this on the green to red, and then just covering down into it. Now, I had drawn out some support here, and so I was kind of covering into this 329, 380s, and I definitely left quite a bit on the table there, but that's how you want to be doing this. Once those indexes roll over, you want to see which one is still leading. So this is just called a sympathy play, right? And so we want to come in and really, really get a gauge of, okay, what type of stocks are trailing? If the market itself is starting to roll, like see when Microsoft starts to roll here, right? The indexes have been trending down for quite some time. Now, why didn't I short the green to red here is because it's too extended going into it. Anytime you red roll, if you're extended going into it, it's not going to work. So I want to let this thing tighten up. I want those EMAs to come on top of it. And then when it red rolls, we can really go in. And I always do the puts on these more expensive stocks. I think that's the easier way to do it because especially on a Friday, they're going to be pretty cheap and you're going to get a lot more kind of bang for the buck. Like if you see like kind of how like Microsoft, Microsoft's puts are, and TC2000 eliminated them on Sunday from what they would be on Friday, but you could see like how much these bad boys move. And the Friday ones will go up hundreds of %. So just something to kind of come and take into the mind. Use the leading stocks. Use a 6-window layout and let those leading stocks, even if you're not trading some of these bigger names, let the leading stocks give you a clue of what's happening overall. And then you can start to hit them off one by one in terms of, the different patterns you want to do. If it's whether it's bear flags or pullbacks into EMAs or so on and so forth. And frankly, if you just have a hot setup on the index, then you can do the puts or calls on that specific index and you'll get a lot of range out of it. Guys, hopefully that helps. Let me know if you guys got any questions. It's looking like a mixed bag in the markets right now. Frankly, I have no clue which way this thing is going. It looks like a big, long consolidation that could set up a end of the year run. But frankly, the way this IWM is looking and some of these other things, we have a lot of cross currents. So this is a day trader's market specifically. I don't think it's really good for swing trading right now. There's not that many powerful setups. If you swing trade right now, do not buy on confirmation or anything like that. You got to be in early inside the ranges and sell into the spikes, or hit things on deep pullbacks and sell into the spikes. But you don't want to be buying into the spikes because we're just not in there. Right now, we're going to be in the teeth of earnings season. So there's going to be tons of opportunities and gappers and things. And I'll start making some videos on that. But guys, let me know if you have any questions. Take care.